Hey, Bulls and Bears, you're watching Bull, Boom, Bear, Bust. My name is JJ, and today is February 22nd, 2023. It is Wednesday, and we've got some very big news to get into today. The economic collapse continues. This is a slow motion economic collapse, which most of the population is actually feeling right now, but most people just don't realize it. They don't realize that what we're seeing and the pain that's out there in the economy, the cost of living, etc., the people that are taking on more debt and more debt and more debt. A lot of these people don't realize that this is not temporary. They've been told it's temporary. Let's see, first it was transitory, and then it was peaking, and then it was, going to be slowing down or lowering, but none of that has happened, right? So this is something that people are slowly realizing. They're slowly waking up to realize, this is a slow motion economic collapse. It's not just a temporary period of rising prices or high prices, and the cost of living is not going to get easier for most people. With that said, let's talk about the latest happenings and events in this slow motion economic collapse. More layoffs. I told you I can't put out a report without an announcement of more big layoffs, right? NPR, media site, cutting 10% of its workforce because of declining ad revenue. More out of Meta, Facebook, Meta platforms. Meta plans to lay off thousands even after the CEO said no more job cuts. Facebook parent company Meta planning more layoffs to impact thousands. Wow, this just is continuing. And this is after other announcements of layoffs, out of the same company there. Let's see what else we've got here. Expert, this is out of Bitcoin.com. Expert predicts looming economic collapse as BRICS nations unite against the dollar. Now, if you've been on this channel, you know all too well about how the world is de-dollarizing, de-dollarization. Andy Schectman, CEO of Miles Franklin Precious Metals, the BRICS nations. We have that announcement out of Saudi Arabia now also that they're going to be taking payments outside of the U.S. dollar for oil, one of the biggest oil exporters in the world. Wow. In an interview, Schectman, a tsunami of inflation with rising prices. The Fed will continue to raise rates, and collapse in asset prices will soon follow. So let's see what he's saying here. A tsunami of inflation with rising inflation, but then the Fed's going to continue to raise rates because of the rising inflation, and ultimately that's going to lead to a collapse. All right, so it's really hard to advise people what to do. I don't give advice here. I think you should take the news and do with it what you will, because everybody's situation is different. There's people out there buying things now, taking out loans right now, thinking that prices are just going to go up, 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 and up. I've talked to more than a few people that have said, I'm buying a car now because prices are just going to keep going up, is what they're saying, because of the de-dollarization, the currency weakness. And there's other people saying they're holding cash because they're waiting for prices to fall. Now, if you listen to this so-called expert, what they're calling him, Schectman, I've heard some of his interviews. He's a very smart guy, obviously a successful guy. He's saying we're going to see massive inflation followed by a deflationary collapse, right? So who's right, who's wrong? What's the timing going to be? If he is right, if Mr. Franklin's right, how long is the inflation going to be before the collapse? But go check out that article if you want to get more into what he's talking about here. Most people in the U.S. are carrying so much debt, and it just gets worse pretty much every month for most people. So we're going to see a slowdown in the economy because the economy needs people spending money, swiping credit cards continuously in order to sustain itself, or in order to grow, or in order to not collapse. But people are going to hit the wall at some point. These credit card companies aren't going to go out and just give out endless credit limits to people, especially with rising interest rates and rising balances, and people not paying off their balances now in full more and more. So slowdowns and more layoffs will be announced. Here's another one. Honeywell to close Smithfield plant and lay off the entire workforce from this particular plant. And is that Arkansas, Smithfield? Regardless, it's going to be a lot more people looking for a job, and maybe they'll go work in fast food. Maybe they'll go work in the service sector, and then the current administration can brag about how many jobs were added because they're not going to subtract the people that lost their jobs, but then they'll add on the jobs that they took. And even better yet, if people go out and take 2 part-time jobs, that's 2 jobs added. So we're not going to subtract the jobs that we lost, but we're going to add on all these little part-time jobs and low-wage paying jobs, so they can brag about how well the economy's doing. Do you guys understand what's going on here yet? I think most of you understand very well. All right, we've got the Fed minutes out there also. The Fed is supposedly discussing the end game for rate hikes. Well, if they're looking to stop inflation, then right now there should be no end game in sight, because inflation is barely budged. In fact, even if inflation gets back to zero, most people will still not be able to sustain their personal finances or their personal budgets, because that means prices are going to stay where they're at. They're going to stay elevated. They're going to stay high. The Fed is looking at a 2% inflation target, which is nonsense, because even a 0% inflation from here going forward means prices are not coming down. They're staying stuck where they're at. Do you understand? So most people, even at a 0% inflation, would not be able to sustain this cost of living. So we're still going to see the bankruptcy tsunami. We're still going to see the vehicle repossession tsunami, the foreclosure tsunami. I mean, they could bring in some programs to help keep these things from collapsing, and I think that's likely what they'll do. And so we have the powers that be that picks the winners and the losers with these packages, with these programs to assist people. But what it is just making things worse in the end. What we need is a brutal deflationary correction. And that's going to do a few things. One, it's going to wake people up and let people know, that this whole economic system, these economic policies that the experts are looking at or using in their toolbox are nonsense and failures. But also it's going to bring down the cost of living. And we need to hold the banks accountable for all the money that they're putting out in the economy. Because when banks always have a get out of jail free card or a bailout certificate, too big to fail is what the common term that most of us know, too big to fail. When banks are too big to fail, they're just going to keep on giving out loans, The insiders getting stock in the company, selling the stock. Instead of paying off debt, they're financing, they're using debt, or they're borrowing money to buy more stock. They're doing stock buybacks with borrowed money. So a lot of the companies that are buying back their own stock are not debt free. Most of them actually carry a lot of debt, while the insiders are buying back their own stock and cashing out for themselves. You see how this works? So this is how these people make so much money. This is why we always see the divide between the middle class and the ultra wealthy continue to widen. Do you understand? And that's why, as of today, about 90% of all stocks are owned by the top 10%. It's amazing times, isn't it? So let's go ahead and figure out how to capitalize on this, the whole deflation versus inflation thing. As we said before, Shackman projects massive inflation followed by deflation because of Fed rate hikes. So if you think that's going to be playing out, then what you'd want to do is you'd want to get in investments now, sell when the price runs up before the collapse. If you think that's exactly how it's going to play out, I don't know exactly how it's going to play out, but that's what Sheckman said. Let me know what you think about his forecast, and what are you doing to protect yourself. I'm still accumulating silver. I still have some minor stocks. I still have some dividend-paying stocks, but also dividend-paying stocks can change in a hurry. Let me just wrap up with this right here. A huge slashing of a dividend out of, this is Intel. Intel has slashed their dividend by 66%. And it's going to be now the lowest payout in 16 years. Intel Corp, the biggest maker of computer processors, slashed its dividend payment to the lowest level in 16 years to try to raise cash. So they see the writing on the wall. They see what's coming. So even your dividend-paying stocks right now, you might want to think about if you're going to hold those and expect a lower dividend payout, or if it's time to sell those now, because the markets, they should be on borrowed time if you look at everything that's happening. Of course, we know that at the click of a mouse, they could bring the stock market up to new all-time highs in a couple days if they wanted to. So we'll see how it goes. So we're going to keep on top of this news for you, hopefully every day if I can. So if you'd like to support this channel, if you like what we talk about here, if you like the news, the analysis, etc., please give us a like and subscribe and come back for more updates. Big love. Bye for now. Keep stacking peace.